There's also within the CBC bill that Yang spoke about, there's also a requirement which applies to public companies under the corporations law rather than the tax definition to disclose information of all entities forming part of the consolidated accounts. So you need to list all your subsidiaries and provide certain information. And one information is whether or not that entity overseas, that subsidiary overseas, is an Australian resident or not. Now, foreign company with central management control in Australia and voting control in Australia will be regarded as carrying on business in Australia and will be an Australian resident. Now, why is this relevant? If you have a US subsidiary doing all the business transaction in the US, in the past, you would say that everything is happening, all the business are in the US, nothing to do with Australia, it is a US resident. Now, be careful with the recent Bywater case. It was held that the act of central and management of control is part of carrying on the business, and therefore, by default, you are carrying on business activities in Australia, which means that your foreign subsidiary could potentially be an Australian resident. So the relevant guidance to look at is PCG 2018-9 and TR 2018-5. So it's worth looking at that. If this rule will apply to you, I would expect your auditors will be expecting some sort of memo or analysis from you. In performing your analysis, just be aware that the double tax agreement might contain tiebreaker rules in relation to the residency of an entity if both jurisdictions regard it as their resident. So in that case, the DTA, the double tax treaty, takes precedence over the domestic law.